Okay, traders, welcome to Charts and Coffee. Hope everyone is doing great. It is FOMC Wednesday, so certainly shenanigans will be underway shortly. But I actually wanted to mention something here. I'm going to be in the Sector Secrets Mastery, of course, and the options room to do the open this morning. We're going to look for some day trades. What is the goal? It's the goal every night. I feel like Pinky in the Brain, looking for, on average, 4 to 6 setups and 2 to 4 fills by 10:35 a.m. Eastern. So really working the clearing range, the initial balance range, really working the trend and the volatility ranges of the first 65 minutes of the morning to set up that AM session. So we'll be doing that. Just a quick warning, though. It seems that the morning of the FOMC has not been, when I look back on the past few months, pull up the data on the day of FOMC, it's not been awful, the day trading in the morning before the 2 p.m. rate decision, the rate statement, and then 2:30 p.m. Eastern press conference. That's not been an issue. What's really been far bigger an issue is the day after, right? The day after has been far more difficult. So ultimately, what we want to remember is that if we are focusing on FOMC, I want to be flat, hopefully by noon Eastern. I don't want to engage in the FOMC hot zone itself unless I'm going to take a much longer term time frame look at it. So that's where the hourly, that's where the daily might be a whole lot better. All right. Give me one moment here. It might be a whole lot better. Again, I'm just making sure the audio and the video is okay for the show here. All right. So then if I know that the 1 hour and the daily are going to have a better sort of shock absorption, they're going to be able to handle the volatility of the Federal Reserve. What I'll do is I'll just open up the 60-minute time frame, take a look at the daily price movement ranges in play. But I will say the one thing that I've noted again and again, the last handful of FOMC meetings, especially within the tail end of this tightening cycle, is waiting for, say, Wednesday afternoon volatility to complete the shenanigans, complete the volatility into Thursday. So the Thursday-Friday window for swings could be better than today. So that means that I want to day trade in the morning, get flat by around noon. I'm not going to trade necessarily the volatility of the FOMC. I'm going to be very cautious about Thursday. Thursday afternoon into Friday is going to look a whole lot better. But then, just when we think, all right, that we have a little bit of smooth sailing, take a look at the calendar. So that opens up a swing window between 21 and 22 of this month. By the way, both those days will be fine for day trading, but then count down to just next Friday, and that's the last trading day of the quarter. Forget the last trading day of the month. It's the last trading day of the quarter. And that transition from Q2 to Q3 is a tricky one. It's a very tricky one. So what I want to remember, yeah, George, exactly. The day after is so unpredictable. So let's just be patient, right? Let's just be really patient. And it's tough because we've been on a pretty darn good tear in terms of day trading through August and through September. And even for me, tapping the brakes is really, really hard because I'm thinking, wow, there's money to be made. You know, yesterday was great. Last week was great. Let's just keep going forward with this pace. And I realized that's what's going to cost me money. Not being able to assess the environment is indeed different and tap the brakes as needed. So that's I'm telling myself as much as I'm telling anybody else, that's the way I'm going to operate the next, well, today, tomorrow, and into Friday. All right. So with that being said, yeah, I agree, George. Yeah, absolutely. The day after FOMC can be really, really challenging. And so if I know I'm entering a lower probability environment or higher volatility environment, however you want to think about it, yeah, it makes sense to say this is not like the other days and trade accordingly. All right. Next up is, all right, let's take a look at our questions as always, gang. If you have any questions, let me know. and we'll take it from there. So Robert mentions, would Koifin be a good tool to take a quick glance at the market and get an idea of which sectors to start looking for trades? Yeah, Robert, we do that in the morning. In fact, I think we did that yesterday and today. That's the 1-day relative performance is a really good way to find what the top and bottom of the performance is. If I'm looking for bullish or bearish follow through, absolutely, I agree, and it's something we use quite often. And it's a very cool free tool, right? And you all know, if I can find some cool free tools to share with you all, I most certainly will. And that one's one I've been using for years. It's a fantastic tool. All right. Tech Trader Joe asked, The Day After Tomorrow, good movie, great books, 10X, best. I'll keep this. Yeah, I can't say I remember this movie at all, to be quite frank. Something tells me the CG was pretty cool. I don't recall it at all. However, I always think about it when we're going into FOMC, like be careful, right, as we go in there. Yeah, what an image. The images are so intense from the movie posters of that movie. I can't remember it all. Dennis Quaid is in it, right? Maybe Jake Gyllenhaal. I'm trying to remember who was in it, but I'll have to watch it again. Yeah, I'll have to watch it again. All right, so let's jump into what's going on with some of the indices. The one that's really got my attention this morning is the RTY. Interestingly enough, the Russell, there we go. The Russell is overall moving higher, has been since the Asian close. So when we close at 4 a.m. Eastern, that's where, for 2 hours, we have the European markets open, the UK markets open, overlapping with the Asian markets. So think Auckland, Sydney, Hong Kong, Tokyo, Singapore. And when we roll into 4 a.m., that part of participation is out. And you end up with about a 3-hour doldrums between 4 and 7 a.m. as the European and UK markets are getting ready to again overlap, this time with the US. And in this window, it's really interesting that we've continued climbing higher. In fact, it's even more interesting that the 7 a.m. kind of the early New York look, I call it the first cup of coffee in New York, continued to hold it. Now look at the difference here between the Russell and the NAS. So after 4 o'clock, uptrend, 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 closing in on 7 o'clock, that first cup of coffee in New York, or espresso. Today I'm doing a double dog espresso. I found this double dog coffee. It had a cute dog on the cover. And I gotta try. Oh, you know what? It's not too bad. Oh, but this is a weird cup of coffee where on one hand, I've got my older coffee that was in the grinder, ran out, and then I mixed it with the double dog. But so far, it's pretty tasty. It's a dark roast espresso. All right. So as I'm making my dark roast espresso, as New York is making its dark roast espresso, take a look at how the multi-trend, the lower row of the two colors starts to shift. And if you checked out the free video from yesterday that is still posted, right? It's posted at the Simpler Trading YouTube channel. You'll see how the multi-trend is something we can use with any indicator. In fact, it's the way that I want to know which indicator to use, right? So my golfers out there, you look at the lie of the ball, you look at the distance to the pin, and you say, well, what club do I need? Not what's my favorite club. That's what most traders do. My fishermen out there, fisherwomen out there, I love to fish. I don't grab my favorite plug. I don't grab my favorite bait, and toss it in. I need to know water temp. I need to know brackish water, clear water, deep water, right? Am I casting a shoreline? Am I bottom? The environment dictates what we do. The first step in any trade is going to be the environment. That 2 rows of colors is the way I instantly and in real time determine what the environment of the market is. And then it's really easy to grab the right lure out of the tackle box, to grab the right club out of the bag. Think about that. Ask yourself, am I just grabbing my favorite, or is this the one that's most applicable to the environment that I'm in? And that's what that is. So as the NASDAQ possibly goes into an uptrend here, take a look. Like I said, real-time assessment. I'm not looking at lines having to cross and create little patterns and shadow puppets or whatever. It's either green and I'm bullish, it's yellow and I'm neutral, or it's red and I'm bearish. So that's what's happening on the Nas. Very interesting. Following that up with the S&P, take a peek here. Look at the S&P. So when we are pre-market, when we're looking at what's happening with the overall environment, who is the S&P tracking with? This is a really important lesson, one we will be talking about a lot when I see you all in the options room and in the Sector Secrets Mastery room in about 9 minutes. Structure dictates strategy. And then also, who is taking the S&P for a walk? The NASDAQ and the Dow are the dog walkers. The S&P is the puppy. The S&P is not dictating what the broader markets are doing. And that's a very common misinterpretation of the value of the S&P. It's a very cool index. But because of its composition at the sector and stock level, being both a little bit like the NAS, or a lot of bit like the NAS, and a little bit like the Dow, our first job is to figure out who is it tracking with. This morning, the S&P is tracking with the Dow. Take a look at the structure. Its uptrend preceded the NASDAQ, which tells us, really importantly, which sectors to focus on, kind of going back up to the earlier question about that Robert had about COIFIN. So think about these things as you're starting off your day. It's going to keep you on the highest probability relative performing sectors and stocks and indices for the morning. All right, so let's see here. What else do we've got? Please, why is the Japanese currency getting weaker to the US dollar day by day? Because the equity markets are generally up, and that is usually a bearish factor for the yen because it's a carry currency. It's typically sold or borrowed to fund the purchase of higher yielding assets. So weak yen is typically a reflection of risk appetite in stocks. And the dollar itself is quite strong. And you can see that really clearly in the weakness of the euro. The best way to read the dollar is not the dollar itself. You might be saying, Rog, what do you mean? There's no way to actually look at the dollar itself. There's no way to look at any currency itself. The only way to look at currencies is in relation to another. So when we look at spot Forex, remember, currency is always one currency for another. Think of the airport analogy. I land in Charles de Gaulle, I take my dollars out, slide them under the window, and they're going to give me euro, right? It's an exchange. Currency is always an exchange. Futures, ETF, spot, it's always an exchange. So when I look at the 6E, this is the pure exchange between the euro and the US dollar. When we look at UUP, DXY, DX futures, it's a basket of currencies against the dollar. And 58% of that basket is this thing. 58% of the basket is the euro. You want a clean look at the dollar? Look at the euro. If the euro's heading up, dollar's heading down. It is a 90+% correlation between these two currencies. So that's what's happening with the US dollar. All right, Captain Jane, how are you? Love the free video yesterday. I appreciate that. Thanks for watching. Thanks for your time. Of course, love the comparison of other simpler indicators. Yeah, I think a lot of folks say, well, why so many indicators? Well, first of all, not every trader is going to want to use, let's go back to golfing. Yeah. My husband golfs with Callaway. I'm a TaylorMade girl, right? And both of us have a whole bunch of other clubs in our bags, right? Okay. So first of all, we can look at clubs. We can look at different kinds of clubs, right? All right. With indicators, it's the same thing. Some traders might want to see lines and levels really, and a lot of them, because it's the way their brains process. For me, like I said, I've been wearing glasses and thick ones of that since the 4th grade. And now I've got cataracts in both eyes. Little lines crossing, that's hard for me to see. So now I'm working within the confines of my vision, saying, I really need bold colors. I need big zones. I really need to see price travel up into an hourly price movement range. And then I need a really clean looking slow stochastic that's a single bold line that changes colors to see crosses. Otherwise, it is difficult for me to see. Look at my multi-trend. I mean, I could see my multi-trend from across the room. So I've designed my indicators and my charts to work with frankly, my limitations and my preferences, right? So then I think sometimes people think, well, why so many indicators? That's where that's what's so great about having the webinars and the classes and the free videos where someone can say, yeah, Rog, I like the big, bold stuff too. And other traders might say, no, I like seeing the really minute stuff, right? Everyone can pick what works for them. And so the thing that I'm trying to say is 2 tools, well, 3 will work with everything and by design. That's the multi-trend because structure must dictate strategy. That's the hourly price movement ranges. They exist in a unique place in the trading ecosystem, which is there is no other tool that finds support and resistance based on time and historical volatility. That's gonna be an asset, a supplement to any approach, right? And then lastly, my grab candles. Seeing neutral, bullish, bearish at a glance is really easy. Sorry about the ring going off, gang. I don't even know where my phone is. We just set up the ring at the office. So clearly someone's doing something over there. Sorry about the background noise. All right. So that's the way in which I kind of interpret that. So when folks say, well, Rog, what about this indicator? I'll say, hey, run it through those 3 basic indicators that everyone can benefit from. And so I appreciate that, Captain Jay. That was my hope, that people realize that there's no one way to do this. There's no one brand of club. There's no, find what works for you. And the more that all of us can share what we do with transparency, hopefully the goal is you all say, yep, that's the approach for me. That's the tool for me, or it's not, right? And I think that discernment is definitely worth, in the early part of your career, invaluable. It's priceless. All right, next up, rainy days. I'll tell you, I'm not a big fan of offshore. I used to like offshore stuff, but I've had my time getting beat up in 4 to 6 on a boat out in the blue. I'll tell you what, give me some backcountry fishing. I learned how to fly fish sometime back. Yeah, give me the quiet backcountry. Let me cast a shoreline, and I'm happy. And I'm happy. With my favorite lures, of course. All right. Let's see. What else do we have here? Where can I see Jerome Powell speaking? Sergio, they're usually this is where financial television is at least somewhat useful. It'll be on all the major financial channels. It's also usually plumbed in through YouTube. So you can probably find it through YouTube. I believe you can find the link through the Federal Reserve's site, and it'll be broadcast on TV. Yeah. So at 2 o'clock, they'll go live to Powell. Yeah, no doubt. No doubt. BLP asks, where can I find the details of my chart setup? So BLP, you can do a few things. Number one, we do have my grab candles and the propulsion, the wave, and the Darvis 2.0, the free version, available on TradingView. We've made these tools available since they were, available 2016. So they've been available for free for many, many years, I guess coming up on 7 years now. And I'm happy to make a number of my tools available because I think they can be a supplement. They don't have to supplant anything. Everyone could use automated support and resistance. Everyone could benefit from the grab candles of understanding bullish, bearish, and neutral movement. So you can do that on TradingView, which makes it a really great broker agnostic place to check that out. Sorry, gang. To check that out. And then if you're in any of the rooms, the Sector Secrets Mastery mostly, I make a custom or premium version available to Mastery folks that include a number of layouts that I use and a number of tools that I use. So there is that. But I always want folks who are not yet part of our Simpler Trading family to say, you know what, Rog, I want to check out some of what you're using, what you're doing. And I'm happy to share that. I know that a lot of traders go check those out. And that's really a needle mover for them. And I'm happy. I'm happy about that. And then folks who say, Rog, I want a little bit more. If this is the free stuff, I can't imagine what's behind the paywall. And that's cool too. So I hope Charts and Coffee is, a good sneak preview into the kind of things that I do. So you can figure out if I'm the right teacher and mentor for you. So yeah, check out TradingView. Gang, just like that, I am out of time. I will see you all tomorrow. Same time, same station. Options folks, Mastery folks, I will see you in about 30 seconds.